Interest rates are dropping. What does that mean for homeowners facing foreclosures right now? We tackle that on today's podcast. What's up, Foreclosure Fix family, and welcome to another episode of the Foreclosure Fix podcast, the best podcast for homeowners facing foreclosure. My name is DJ Olojo, and I am your host, and I'm excited because our mission is to help 1 million homeowners successfully navigate foreclosure. Now, if that mission resonates with you, please do me a favor, like, subscribe, or share our content with someone who you know can benefit, or grab them a copy of our latest book called The Foreclosure Fix, 12 Proven Steps to Beat the Bank, Escape Foreclosure, and turn your property into a profitable asset. You have come to the best place online, on any podcast platform, or just on the World Wide Web if you are facing foreclosure. Hey, the content we have here is top notch, and our goal is to help you navigate your situation and be in a better place. And on today's podcast, we are keeping in that same vein because we are talking about interest rates. As you all may know, interest rates are dropping. They are probably at, their all-time yearly low at around 6.5%. They peaked out around last year at about 8%, I think around October or November of last year. And now we are down to 6.5%. Now you may say, DJ, that's only 1.5%. Things are still super high. But when you are looking at the real estate market, a 1.5% decrease or 150 basis points decrease in interest rate is huge. So I want to talk about today the 5 ways that the current interest rates impact homeowners facing foreclosure. The first thing I'll say is that if you are a homeowner facing foreclosure and you have pondered or considered putting your house on the market, now may be a really good time. And the reason I say that is because on the real estate side, I am seeing an uptick in the number of listings coming to market. We are in the end of summer when we're recording this around mid-August, and listings typically peak around March and through the summer, and they typically begin to die down as you go into the fall and winter. However, I am seeing continued increases in the amount of listings, in the amount of listing activity, and the amount of calls that me and my colleagues across the industry are getting from homeowners saying, hey, I'm thinking about listing my property for sale. Can you come give me a broker's price opinion? Or can you come kind of give me a listing presentation so I can know the value? And so for you as a homeowner facing foreclosure, it may be a very good time to list your property if that is in your plan. So you may have said, well, my financial situation is a little challenging right now. I'm thinking about selling in the next 12 months. Well, this may be an ideal time. I do think if I had a crystal ball that the Fed will drop, reduce rates here in the near future, probably at their next meeting. However, the Fed rate does not necessarily correlate directly with the interest rate. The interest rate is tied to the 10-year treasury. And so as a result, just because the Fed drops their rate does not necessarily mean that interest rates are going to drop on the residential lending side. And so being at 6.5, I think by the end of the year, we may get a little bit lower, but I don't know. But I know that we are lower than we were just a year ago, about 1.5%. And so that is huge. That being said, the big takeaway is that if you are considering selling your house, you may want to have some more candid conversations with a real estate professional who can help you navigate that process. Or if you're doing a for sale by owner or selling to an investor, things like that, you may be able to get a little bit more. And the reason why you can get a little bit more is because at 6.5%, I can pay you more than I could at an 8% interest rate and still have the same monthly payment. And that is what people don't realize. If you are a home shopper, you are not typically looking at, oh, I want to buy a house for $300,000 or I want to buy a house for $500,000. What you typically are looking at is I can afford a payment of $2,500. I can afford a payment of $1,500. I can afford a payment of $5,000 a month. And that's how you begin to shop. You typically back into your home value or your home price by looking at what you can afford all in: taxes, interest, insurance, and things like that. And so most people start and say, I can afford this amount. how much house can I buy? That's the way the process typically works when I'm talking with homeowners who are trying to buy houses. And so if the interest rate is down 1.5%, that means that they can afford more house. And so oftentimes you can get a little bit more money in your pocket, which obviously, as you know, more money is always great when you're transitioning and just to pad your coffers. All right. So that's number one. Number two, if you are kind of trying to keep your house, you may be able to modify or refinance your loan at a better interest rate. So on the refinance side, if your credit is already damaged, it's going to be hard to refi. I'll tell you that right now, that a lot of people sometimes have credit scores that are super low and they can't get a refi, even though they have a ton of equity in their property. And the reason may be is one, you may not have enough income to pay the new mortgage. So you may say, DJ, I have a ton of equity in my house. I want to refi and pull some of that out. But you can't do that in situations where you don't have the ability to repay. So maybe you're on fixed income, or maybe you're on no income, and you just say, I want to get that money. Well, it's hard because when they underwrite you for that loan, they have to make sure that you have the ability to repay. And yes, you may be pulling out $100,000 or $50,000 and say, I'll just pay you from that money. But what happens when that money is gone? Which inevitably it will be gone when you start paying your monthly mortgage every month, right? It's going to be gone in the next year or 6 months or 2 years. And so they can't underwrite you like that. And so unless you are of age where you can get a reverse mortgage that doesn't have any payments, it's going to be very hard to refi if your credit is damaged or if you don't have income. That's the first thing. However, on the modification side, you may be in a better position to get a more favorable modification from your lender. As we always talk about on this podcast, when you are facing foreclosure, the best thing you can do is talk to your lender. You cannot be a mute. You cannot just sit quiet. You need to talk to your lender. And so in that process, if you are filling out modification paperwork and things like that, you may be in a position to get a better interest rate on your modification. I have seen mods with interest rates as high as 11% in the past. And so 11% versus kind of 8% or 6.5% makes a huge difference for your monthly payment. And so if you are in a situation where you are currently going through the modification process, you may be able to get a better interest rate on your mod. The other thing I'll tell you about the modification process, if you have a federally backed loan, like an FHA loan, their mods typically have certain parameters in which they're set at. But if you have a conventional loan or it's a second mortgage that is foreclosing and they're doing a modification, then they can go as high as they want without hitting usury. And so as a result, those are the ones I'm talking about where you can get a better rate on your mod. All right. So that's number two. You may be able to refi or get a better rate on your modification because of the lower interest rates. Number three, if you're underwater on your home. So that means you don't have enough equity to sell without doing a short sale, or your loan balance, right, is more than the value of your house. So your house is only worth $300,000, but your loan balance is $325,000. And you're saying, DJ, I'm just in a bad spot. I want to get out from under this, but I can't. Well, with mortgage rates dropping, what I anticipate we will see over the next 6 to 12 months is continued price appreciation in our properties. And yes, I said it. I think we're going to see even more appreciation in our properties. You may hear some people saying, oh, home prices will be diving down and, now's not the time to buy a house or things like that. I am of the belief that we will continue to see price appreciation in homes, especially if interest rates continue to tick down. For the exact same reasons I just mentioned, if people can afford to buy more house and have the same monthly payment, they typically will buy more house. That's just the way it works in real estate. And so as a result, I think we will see continued price appreciation. Now, let me be specific about this so that way you all don't pull up my predictions and say, hey, DJ, you told me my house was going to appreciate. Why didn't appreciate? I think that this is regional, right? Just like all real estate. And I also think that this is price point dependent. And what I mean by that is if you got $1 million home in Georgia or $1 million home in Michigan or $1 million home in a Midwest Rust Belt state, right? I don't think you're going to see tons of price appreciation at that price point. Now, $1 million home may be just the bare minimum in California or Seattle. So I'm talking about different numbers. But the numbers I think are going to increase are your first time home buyer homes. So across the country, I think the going rate for first-time home buyers on their home across the country is around $400,000 or so. Now, give or take a few $1,000s in either direction. That being said, I think that number will continue to tick up. I also think you may see some increase in like that move-up home as well. You'll see some increases there because of the fact that people are going to go from, I had a small house and I only had one kid, but now I have 3 kids and 2 dogs and I need a bigger place. And so I think you're going to see some increases there as well. The other thing I'll say as to why I think that interest rates are going to increase is going to bring me to my next reason, which is number 4. I think you're going to see more investors jumping into the pool to begin buying property. The reason I think you're going to see an uptick in that first time affordable range is because just like first-time home buyers, investors love that first-time home buyer product because they're investors. They want to get cash flow. And if you're not familiar with cash flow, it's the money you make after you pay your taxes, your interest, your insurance, and you collect your rent and pay all your expenses. It's that delta between what you bring in and what you put out. And so investors love cash flow, and the best way for them to get cash flow is on those less expensive first-time home buyer properties. So not only will first-time home buyers be competing for them, investors will be competing for them. And what lower interest rates do is that it allows investors to get better rates on their loans as well. So not just homeowners, but investors will also be vying after these homes. And so as a result, we'll see more investor activity in the next 6 to 12 months for sure. And investors haven't just been on the sidelines, but I think you're going to see them come back in a much stronger way as we see interest rates drop. All right. And so my last thing, number 5, right, is that some buyers may be on the sideline. And that is the other thing I'll say with interest rates dropping. I think the first 4 things I said were kind of all positive, with the exception of maybe investors jumping into the marketplace. But number 5 is that we'll see some people sitting on the sidelines because of the interest rates. And what I mean by that is if you've been watching the stock market or you've been watching your portfolio, and I hope you don't kind of just stare at it and watch it go up and down because it can drive you crazy. The stock market has been on a wild ride the last couple weeks. And so I think that when people feel like the stock market or like their portfolios are going up, they are more bullish and more aggressive in their investment options, or they have more confidence in the ability to go buy a house. However, when they see their portfolio dropping and they're saying, man, I was a 100,000-er yesterday or a millionaire yesterday, but now, I've dropped down, then they feel less confident to go take risk. And as we see the volatility in the market, and as we see the market not being kind of stable right now, there are lots of people who are going to sit on the sidelines and say, I'm going to wait and see how this plays out. And so as a result, you may see some people who were actively trying to buy a home stop the process and say, I'm no longer interested, even at the lower rates. Or they may say, well, if rates are at 6.5 right now, I want to wait for them to get to 5.5. I'm willing to wait another year or something like that. And we don't know where rates are going to be. I doubt they're going to get as low as 5.5. I think that if I was a betting man, I would guess that they will hover somewhere between 6 and 6.5 over the next, 6 to 12 months. But that's better than when we were just a year ago when we were at 8% and everybody was crying. And so as a result, these are the 5 key takeaways that I see for homeowners who are kind of in foreclosure. This is what the lowering interest rates means for you at this season. And I want you to take this information and figure out where do you fall? Like, what do you want to do with your house as you face foreclosure? If you see the writing on the wall, if you see that your bills are mounting and that their pressure is coming in from every side, I need you to stop right now and get some help. And help is always free. You can call HUD, you can call counselors, you can email us at help@theforeclosurefix.com. No matter what you're doing as it pertains to your financial situation, as it pertains to your house, the place you lay your head, the place where your kids lay their heads, it's so important that you make the right decision, that you don't put this off, that you don't act like this is not happening, that you don't act like, everything's just going to be all right because because you want to wish it. And I'm all for prayer. I'm a prayer warrior. I'm right there with you. But prayer by itself does not solve things. It takes action as well. So yes, say your prayers, ask God for help, but also take action, because faith without works is indeed dead. And I always believe that you need to take action in order to change your situation. And so with that, my action steps for you and my best advice for somebody facing foreclosure in our bow tie round that is coming up right now, it's where we give you our best advice, the one thing we're grateful for, and our wildest or most interesting foreclosure related story. My best advice for somebody facing foreclosure today is to utilize the lowering interest rates to put yourself in a better position. And what I mean by better position, that may mean sell your house and go rent an apartment, or go move in with family, or go get a less expensive living situation, or take the windfall you're going to get from selling your house to start afresh. Refinance, or get a reverse mortgage, or get a better rate on your modification, right? Actually go through the modification process, submit the paperwork, do the things that you need to do, or sell it and move on and figure it out, or file bankruptcy. So my best advice is do something to put yourself in a better situation where you can be free mentally, physically, financially, emotionally of the stress that comes with having financial difficulties and financial burdens. Trust me, I know firsthand that when you are facing mounting financial pressures, everything looks bleak. The sun doesn't shine as bright. Your kids are louder than they should be. Everything that you should be loving and enjoying just feels like a pain. And so as a result, don't let that be you. Take the right steps you need to take today and reverse and change your financial situation. All right. The one thing I am grateful for online auction sites. And that seems pretty weird, but I recently had an opportunity to bid on a new work truck on an online auction site. And although I got outbid by somebody by a few $1,000s, I was like, man, I'm just really grateful for the opportunity to sit at my desk and click and bid on some cars to help me in my business. And so it seems weird in my name, but I'm just so grateful for online auction sites, and I guess technology in general, that just allows me to communicate with you through the camera and through the computer. And I don't know you yet, but you're listening to my voice. And so I'm grateful for you. I'm grateful for technology. I'm grateful for where we're going to be as a society in the next, 10, 20, 30, 40 years, because we just keep making huge advancements. My wildest or most interesting foreclosure related story comes from a loan file that one of my buddies was working in Michigan, right? And if you don't know, some states are called redemption states, which means that after a property goes into foreclosure, you have 6 months or 12 months to go back and redeem the property, pay off the loan, or pay any kind of interest and fees associated with it. And so Michigan is one of those redemption states. And so my buddy was working a loan, and this homeowner had tons of equity. I'm talking about hundreds of thousands of dollars in equity. And my buddy was basically like, hey, I'm pretty confident that this person is either going to pay off this loan, sell the house, or go into bankruptcy, because they just have so much equity. And so they went through the foreclosure process. The person was not responding, and they took it all the way to foreclosure sale. And guess what? It went to sale at the foreclosure sale. And my buddy was just dumbfounded. He was like, this person left hundreds of thousands of dollars on the table in a situation where they could have sold the property and made a huge profit. And so in that scenario, one of the things that we both think is going to happen there is that person is probably going to come back and just redeem it. And I see that a lot, is that some people will kind of chance it and go through the foreclosure and then wait that whole entire, almost year where it lies in Michigan and then redeem it. So like you have a year to redeem the property, but they may wait to month 11 and then redeem the property. So that's what I anticipate is going to go there. It's just a wild story for me, because I always tell you all on this podcast, do not procrastinate. Do not wait. Do not say I'll do it tomorrow. Being in foreclosure is an important thing that you need to take care of right now. It's not something that you throw on the back burner. It's not something I'll get to next week. It's not a snooze type thing like in your email, right? It's let's do it right now. Wake up, get up, and go. And if you don't realize that, you will soon, because I am telling you, the banks are ramping it up. I was looking at some data recently from Adam Data, and guess what? foreclosure filings in the month of July are up, right? And so that data is always a month delayed, but foreclosure filings are up, right? And they're up a slight, percentage. So, and not even a full percentage, but they're up. And so what I'm telling you is that banks are not sitting around playing, waiting, hoping, wishing, and praying that you all come pay them. They're not. They are there waiting for you. And if you don't come to the table to negotiate, to modify, to do something, to pay off, they're going to take action. They're either going to sell the loan to somebody who will, or they're going to do it themselves. And so don't think that we are like the past where people are just going to wait for you. They're not waiting. They're taking action day in and day out, and you need to take action on your end. Y'all, that brings me to the end of another podcast. If the mission to help 1 million homeowners resonates with you, you know what to do. Like, subscribe, share our content with someone who you know can benefit. Leave us a review, either on our book or on the podcast. All the reviews we get, everything that you all tell us, we use to make better content for you all who are listening. And I just really appreciate you all checking us out. If this is your first time, welcome to the Foreclosure Fix family. If this is your 100th time, you're a part of the family. Get your popcorn, sit down, and we'll be here for you. As always, I appreciate you. I love you. God bless you, and I will see you soon. The views and opinions on this podcast are for informational purposes only and should not be construed as legal advice. If you have a specific legal question, we highly recommend you contact a qualified legal professional.